Have you ever wondered why interest rates aren't falling in 2024 like many people thought they would? Today, we're going to dig into this surprising economic twist and find out what's really going on. Interest rates are important tools for central banks to control how fast the economy will grow. Usually, when the economy is doing poorly, these banks lower interest rates. This makes borrowing money cheaper, which encourages people and businesses to spend more and help kickstart the economy. However, in 2024, things aren't going as expected and rates aren't dropping. Let's explore why this is happening. There are several reasons why interest rates are staying high or even going up, and it's important to look at the big picture to understand them. Factors like inflation, job markets, and world events all play a part in this decision. First, let's talk about inflation. Inflation means that prices for things like food and rent are going up. When inflation is high, your money doesn't go as far as it used to. In many places, inflation is higher than it's been in a long time because of problems like supply chain issues and changes in global trade. Due to political tensions, central banks are keeping interest rates high to try and control this inflation, even if it slows down economic growth. Next, employment figures are showing unexpected trends. Normally, more people are out of work during a slow economy, which would usually lead central banks to lower rates to encourage businesses to hire. But surprisingly, the job market has stayed strong in many areas, which means there's less need to lower rates to boost employment. Also, world events and political decisions are influencing economic policies. Things like trade disagreements and economic sanctions are reshaping how countries interact economically. Central banks have to think about these issues when they decide what to do with interest rates. A big moment in understanding why rates are staying high came when major banks around the world, like the Federal Reserve and the European Central Bank, they started focusing more on controlling inflation than just boosting the economy. And this change in priorities helps explain why we're seeing higher interest rates during an economic downturn. The main reasons why interest rates aren't going down in 2024 are because of high inflation, strong job markets, and the complicated global political scene. These factors make it tricky for central banks to lower rates like they usually would during tough economic times. What do you think about these reasons? Should interest rates be lower to help the economy grow, or is it better to keep them higher to control inflation? Share your thoughts in the comments below, and don't forget to subscribe for more discussions on interesting economic topics.